Hello Jags, Fahad here. Twitter will be reporting earnings tomorrow, February 7th, before market opens. And what I would like to do is I would like to take a look at a few things that stand out in my analysis. First of all, to start off, Twitter has seen some very aggressive and very active option activity for last several weeks and several months. Notably, if you pull up the option chain, you will see very large open interest in February 35 call options, about 20,000 some open interest. March 34 call open interest has 60 some thousand. January 20 way out there, January 20, 65 and 70 strike call options have 47,000 and 110,000 call open interest. These leap calls were accumulated in stock last year between July and October. So very large bulls that are quietly positioned in the highest strike that is available in the month of January 2020. Some fairly significant bet. In fact, this January 2070 strike was bought in a single lot. 80,000 contracts were bought in a single lot way back in October of last year. Now, if you are in Jaguar Analytics and if you go to the activity tracker, you'll be able to see all the option activities that we have been recording in the stock. You can pull it up for any stock just by entering the ticker. And here's a clean snapshot from Jaguar scanners that basically pick up all the calls and puts that are going on the offer. And you'll see for the last couple days, particularly for the last 2 weeks, there have been consistently a lot more call buying that has been taking place on the offer in Twitter versus put option. Now, on the fundamental side of things, I think it comes down to ultimately all about user engagement. And I'm wondering over here if I'm the only one that is simply experiencing better user engagement for the past, let's say, 6 months to 9 months. I'm pretty active on Twitter myself. If you go to your phone and you pull up the app, Twitter app, you will notice that as soon as you go in, the first thing that pops up on your screen right up on top is essentially some sort of live streaming taking place from some platform that they have found partnership with. So sometimes you'll see Bloomberg, sometimes you'll see routers, sometimes you'll see something else. So give you some concrete examples over here. Last night, as I was putting my kids to bed, doing other things around the house, I wanted to catch on the State of the Union address. And so I didn't have time to sit in front of TV, so I simply went into my Twitter app. I saw that State of the Union address was playing live streaming right on top of Twitter app, pulled it up, watched it for a couple minutes, closed it, went back again later to watch it a little bit more. So right there, I didn't have to sit in front of TV to do that. Last Sunday, when Super Bowl was on, I wanted to catch on the halftime performance. Same thing, I was not in front of TV, went into my Twitter app and found out that Twitter was live streaming the halftime performance. Watched it, turned it off. Go back further, during New Year, I had some family that was visiting from Virginia, and we wanted to see the New Year celebration that was taking place around the world in every single major country. I flipped channels after channels on my cable network to see if there was any station that was broadcasting the celebrations around the world. Not a single channel, except there it was on Twitter. Simply went on top of the app and I saw that Twitter was live broadcasting from Japan, China, all the way to France, England, and then to the United States. Similarly, you go back to G20 meeting, and after G20 meeting, there was a major speech that was given by Premier Xi in China, and nobody was broadcasting it. I don't get any Chinese channels on my TV. However, there was Twitter with the partnership with South China Morning Post as well as through CCTV. Twitter was broadcasting the entire speech right on their platform. Very simple. Simply put it up on my phone and I was able to watch and catch whatever that was going on. Am I the only one that is seeing these user engagements, the streaming services, the total number of partnerships that have been taking place going up gradually, or is it really millions of other people experiencing the same way? And I think this is really the core story over here. I think gradually underneath the surface, the improvements have been so resilient in Twitter that I believe it's going to continue to bring more people to the platform, and more people means more user engagements, more ad revenue monetization, more ROI for advertisers, and as a result, better stock performance, or at least that's my logic over here. Let's look at a couple different things, at least some of the partnerships that we know about that have been released through press releases. On October 1st, now I'm only focusing on news and partnerships that were announced in the fourth quarter and beyond, because we are looking at the company's earnings report that are going to be coming out tomorrow morning. So it's the most relevant ones. On October 1st, Twitter expanded in-stream video advertising globally. Now, previously, in case if you do not know, if you're an advertiser before October 1st and you wanted to provide some in-streaming of your services on Twitter, you were not allowed to essentially advertise for your services outside of your local markets. Twitter changed that effectively on October 1st. Interestingly, that was around the same time when we saw that massive call buyer showed up in January 2020, 70 strike call options. Now advertisers can actually advertise live stream and actually reach out to the audience globally. In that press release that came out on October 1st, the company said in-stream video ads were designed to unlock incremental revenue for top publishers. Over the past years, we have expanded this capability to nearly 20 global markets, including Australia, Brazil, and Spain. This was not available previously. Now it's available and it gradually continues to roll out to all the countries. Next one, on October 24th, company announced a partnership with Turner's Bleacher Report for the House of Highlights, a 75-minute live monthly talk show for Twitter. And immediately, Twitter was able to get McDonald's to sign up for the lead sponsor for the show, as well as Venmo and Uber Eats sponsored for the multiple episodes of the show as well. And so another major partnership with sponsorship already coming. This was on October 24th. Here is a nice article that actually talks about this. Bleacher Report is making a House of Highlights talk show for Twitter. Next one. On January 7th, very recently, Twitter renews the BuzzFeed's AM to DM, the daily morning show, for 1 full year. Now, previously, this was happening quarterly basis, but given the success of this particular partnership, they decided to do it for the whole year. Not only that, at the same time, Twitter also renewed its partnership for streaming with Bloomberg, which is one of the things that I referenced earlier. Anytime when you go to your Twitter app, you pull it on your phone, you'll be able to see sometimes Bloomberg, sometimes routers running live presentation. Here is the press release. Twitter and BuzzFeed extend AM to DM for another year. Go further. Also in January, in the month of January, Twitter also announced an expanded partnership for this summer's FIFA Women's World Cup in France 2019. This was announced in January, and I bet you that once the World Cup is here, the Women's World Cup is here, the whole world will be watching, and many will be flocking to Twitter platform wherever they cannot see it on their TV. This is going to be live broadcast as well. Here is the actual press release that came out with partnership with the Fox Sports Network, where they're going to be broadcasting the FIFA World Cup in 2019. Another one, this also happened in January, a live streaming deal for 20 NBA games on TNT this season, with an isolated camera view on a single player throughout the second halves of those games. You cannot even get this kind of extended detail on players watching traditional TV news network. But here they're able to do. Live streaming partnership for 20 NBA games. By the way, they're trying to work so they can expand this for more than 20 NBA games to include more games. We'll see if we get some news about that. But this is another big one, all right? Here is the actual press release behind this, where the NBA and the Turner Sports and the Twitter basically offer this complimentary streaming service. That's going to be coming up sometime in March. And so this is how it goes. When you put all of these things together, the question becomes, is this enough to lift the daily active users higher? Here is what the daily active users on a percentage basis year-over-year growth is doing. Now, Twitter has always been blamed for not being able to see any incremental improvement, sequential improvement in daily active users, and at the same time monetization in the past. You can see that for the last 2 years at least, The daily active users growth is still positive year over year every quarter, but it has gradually trended down, sort of potentially, stabilizing around 9% to 10% growth year over year. I believe there is potential over here for the daily active users to actually sequentially improve once the company reports earnings. Similarly, if you look at the quarterly ad engagements and the cost per engagement, you will see the total ad engagements between the users and the advertisers has gradually come down, currently around 17%. I think this is where you're starting to see stabilization after a significant decline. This is where the stabilization coming into play. But most importantly, the cost per engagement has actually also improved at the same time. So overall, the metrics are also improving. I think if you sense even the slightest sequential improvement from quarter to quarter in this metric, it will be positive for the stock and it's going to fly. Another thing I want to mention, I'm not the only one that is actually seeing these improvements in the engagement. A recent earnings preview that came out from Bank of America on January 10th, they did a double upgrade on the stock, going from sell rating to buy rating and raising the price target to $39 per share. Here's a quote from that report that catches my attention. Twitter penetration increased to 48%. Improving metrics in the 18 to 29 demographic suggest more younger users are turning to Twitter. 9% of users indicated they plan to use Twitter more, up from 6% in their prior survey. There you go. This is a sequential improvement that I'm talking about. It's showing up in the demographics and in the surveys as well. Last thing, the chart side. If you look at the technically on this chart, what you will see is the company had a remarkable first half of 2018, even when the overall market was quite choppy and volatile. It really wasn't until the second half of 2018 when the company went in through a corrective phase, a large corrective phase within a strong uptrend. It has been forming a base here since July of last year between $27.50 and $35 per share. And even when the market was getting beaten up in December, the stock actually never broke down through critical support levels. It basically continues to consolidate. The relative performance is telling me that this is potentially sets up for a breakout through $35 per share, and then I think we could see a new all-time high over a long period of time, several quarters from now. Here's the last thing I will point out before I end this. The most important thing about Twitter you should know is that the channel checks essentially are coming out strong. However, the total year-over-year comparisons for the quarter that will be reported tomorrow morning is going to be difficult. In fact, here's the BMO Capital research report that points out exactly the same thing. And RBC Capital said exactly the same thing too. While the total traffic trends have gradually improved, the growth rate for the fourth quarter is expected to be 35% year over year, which may be seen as a decelerating trend from what was very strong 42% growth in the prior quarter. So sequentially, growth rate in absolute terms will be very strong, but realistically, compared to the estimates out there and optically, this may seem a little bit of a inline quarter or whatnot, simply on the basis because the year-over-year comparisons are tough for Twitter. But nonetheless, I believe the stock will actually, if it sells off, I believe it will present a buying opportunity given the better user engagements on this one. And if it breaks out, I believe there could be substantial upside in stock. That's it from me. Thank you very much. See you next time.